This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Daniel O'Brien, K-State grain economist, starts the show with a volatile grain market update. He explains what factors are contributing to the changes. Part of a Clearing the Air podcast with K-State's Jenny Ifft and Eric Atkinson, along with Brad Lubben and Mark Edelman, as well as special guest Tara Smith, continues the show as they chat about the Farm Bill and what they are currently seeing for it. K-State meteorologist Chip Redmond ends today's show as he discusses the recent precipitation and the lack of it in the forecast. That and more is coming up ahead. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Daniel O'Brien. Daniel, thanks for joining us today.
Thank you very much, Shelby.
Daniel, beforehand, you mentioned this being a volatile market, and so what are we seeing?
It's interesting that from the perspective of several major traders, they're paying, of course, they're paying some attention to planting rates and the domestic issues that when you're around the 1st of May, that affect grain price, production and price prospects. But they're also looking at a good number of the international geopolitical energy market factors that are coming into play, as well as long-term weather forecasts, et cetera, for this year. So we're at a time here where the different major commodities are kind of taking their turns and making runs to the higher side. Corn of late has had its turn, as well as wheat here within the last week or so. So the closes are markedly different. When I say markedly, we're talking 20, 30, 40 cents difference from where we were just a couple of months ago. And for some of these, even more of a difference. And those would be generally to the higher side. Corn closed yesterday with the lead contract, which is on the verge of entering into the delivery period, closed at 463 and a quarter July, which is what the elevators will be shifting over to now for their local elevator cash price forward contract, cash price determination, if they're not already there. 474 and a quarter. We were in levels 30, 40 cents below that not that long ago. Dees corn, 493 and three quarters, and we were hoping to stay above 450 not that long ago also. So you have some issues at play. And I think we've heard a lot of talk in the corn market and sorghum also about how higher fertilizer prices brought on in part by the energy market happenings, et cetera, how that may affect plantings. It's kind of two trains of thought on that. There's some that have said, and I think there's a lot of merit to that higher fertilizer prices right now may not affect acreage as much as they will off in the future because so many farmers bought their fertilizer earlier. But if we have a continuation of high fertilizer prices going heading on into the middle to the latter part of this year, especially off into fall, then you've got more of a situation. Of course, that corn question hinges on what we had coming out of the prospective plantings report that happened here at the end of March, where the USDA had projected. Farmers had told them via survey that they were going to plant about 95.3, 95.4 million acres. That number, as soon as it came out, was in question because of these fertilizer issues. So here, come the end of June, we'll be looking strongly at that corn number to see how it holds up. And the others, this just flip side of that coin was that if higher fertilizer prices we have an impact on corn, then we wonder about soybean acres going even higher than had been projected by the USDA of about 84.7 million acres projected. Again, at the end of March, USDA had planted last year about 81 million, and again for corn, about 90, just under 99 million. So now we're looking at trading about 3 and 4 or more million acres of less corn if the expectations of the trade are hold true, and about the same amount of increase in soybeans. And if that comes about, then we pay attention to the climatologists like our colleague Chip Redmond to see what the weather is and how successful we think crop production prospects with the yield component added in are this year. And just really a thought-provoking situation. If we do end up with markedly lower corn acres even than have already been projected, and if we don't get tremendous corn yields, then we tighten up the corn supply demand balance sheet, supports prices at the end of the day out into the fall, and we see where we go from there. And this also will have some impact on grain sorghum acres, which were again last year 6.64 million acres in the U.S. Projected at the end of March at 6.1 million. And whatever changes would happen in corn, with grain sorghum also having the same types of factors affecting it that could be in play. So we've got those issues going on in the feed grain and the soybean markets. Again, I should mention that soybean prices have shown strength from where they had been in the past, not as volatile here in the last couple of weeks as corn has been. The July contract, which we're going to be rolling over into now that we're into May for elevator purposes and hedging, merchandising, et cetera, $11.95 and a quarter for prices, a bit higher than where we had been in the past. The new crop bid, $11.71 and three quarters. So just thought-provoking to look at. When I look at some of our, I guess right in the central part of the state around Salina, Hutchinson, and you look at the corn, soybean, new crop forward bid ratios, so you have basically in the Hutchinson area, a soybean to corn forward bid ratio of about just under 2.6, and that would favor soybeans more so. And Salina still favoring soybeans, not quite as much, 2.45. Of course, you go out to Garden City, if 2.3, 2.4 is the neutral zone, then in the Garden City area, they have a ratio of beans to corn of 2.2. Well, that's, of course, favoring corn in the demand center. So thought-provoking. I should say for wheat, we've had strong run-up for wheat this week. We had the lead contract for wheat at one time trade above $7, and the wheat futures price on yesterday for the July contract, and we're just again rolling out of May into July, just under 7 at 696 and a quarter. And when you go out to December, we're at 722 and a half. And we were 5 and hoping for 6 not that long ago. So I think concerns about crop ratings here in Kansas for wheat, they certainly have the attention of the market. And here, as of August 26th, we had a report for Kansas for wheat conditions of 16% very poor, 25% poor, so 41% poor to very poor, and that is matched, if not exceeded, by the poorness in Nebraska. Again, even more negative ratings. Oklahoma, just about the same as Kansas. Texas, 56% poor to very poor. So those numbers have the market's attention, and we shall see. I just would have one statement that wheat is a resilient crop, and we've seen that time and again. And here we've had moisture here of late. Farmers they're in the mode of either keeping wheat as it is, or if insurance or other factors don't limit them, they could terminate the wheat crop, come in with something else if they catch some rain, feel things could go well. The fertilizer issues are working against that, fertilizer costs. So what a deal. We went from a pretty docile time in December, early January, to now thinking, gosh, combination of these international geopolitical conflicts, the impact on the fertilizer market, ethanol holding it pretty decently. Other issues in play have really given us a set of, I guess, uncertain factors to look at as we go forward. But as it's all played out, we do have higher prices right now than we had 2 or 3 months ago, and that's giving us some, I hope, but some better profitability, at least revenue options to look at for these crops.
And as we're thinking about factors impacting the grain market, are you seeing any of those be transportation ones?
Yes, I would add each week the USDA Agricultural Marketing Service puts out a grain transportation report, and the one this week I think is particularly interesting for us in that it does talk about, on the one hand, how the White House has extended the Jones Act suspension by 90 days, allowing non-U.S. flagged ships to be involved in moving energy or fertilizer. So what I guess that interpret that extension, they're basically saying, hey, we have product at different places. We don't care if it's a U.S. ship or a foreign-owned ship. We just need to move the product. So they extended this Jones Act, which would limit us to only being able to move grain. Well, these products, pardon me, via U.S. ships. So we have that. The second story is the Strait of Hormuz closure, and all that's happening over there has brought congestion now to the Panama Canal as we reroute ships. So that affects grain trade and exports. And there's an article there that for anybody in Western Kansas that would be of interest to them, talks about how, and the headline is, a High Plains grain shipper challenges K&O Railroad paper barrier and rate reasonableness, dealing with some action taken by Wescan Grain in the western border of Kansas, dealing a lot with eastern Colorado, and how they've brought these actions to the Surface Transportation Board. And of course, that's quite an important issue for them in that area. But that ruling, if the people bringing the action, if Western Grain brings that action, if there's a ruling saying, hey, something's not functioning as it should, it probably would have repercussions for other short line railroads around the state. So I'd encourage you to go online, find that article, and look it over. And we'll also have that in our weekly grain market review on Kansas State on the KSU Ag Manager website coming up. So lots of things going on, almost none of it docile. I don't know if you call it excitement, but there's certainly volatility and questions in the market. And as that all plays out, it's given us some opportunities price-wise.
Daniel, I appreciate you taking the time to join us today.
Thank you very much, Shelby.
That was K-State grain economist Daniel O'Brien. We're cutting to a short break now, but we'll be right back. You're tuned in to Agriculture Today, and we continue our show with parts of a Clearing the Air on Agricultural Policy podcast from the Flinchbaugh Center and Smoke and Mirrors podcast. Today, they discuss the Farm Bill, and then as their special guests, we have Tara Smith from the Tory Advisory Group, and as always, we're joined also by Mark Edelman of Iowa State University, Brad Lubben of the University of Nebraska, and Jenny Ifft and Eric Atkinson of K-State.
How do you encapsulate what the Farm Bill is?
Yeah, it's a big bill. I think the first thing you have to remind folks is that it's not just about farmers, right? It's more than just the farm safety net. Because I think when you talk to folks who don't really fully know a lot about the Farm Bill, that's the first place their mind goes, because it says Farm Bill. But it's really so much more than that, right? It's a research bill. It is a nutrition bill. It's a forestry bill. Sure, it has the farm safety net included as well, but there's really a lot more to it than that. And really, I think the Farm Bill in some way, shape, or form touches everybody in the United States. You know, maybe it's a research project that impacts their life. Maybe it's, their rural wastewater system got upgraded through a rural development grant. It could be a lot of different things, but I think it touches pretty much everyone across America.
What I see in the media, public statements of people working on it, it sounds somewhat optimistic. Outside of that, I'm hearing more pessimism. So I'm curious where you think things are at.
Yeah, optimism tends to wane on year 3 or so of extensions. That feels pretty natural along the way. I will say that I think we're feeling momentum now that we haven't felt in 3 years.
What are some of the key elements for the layperson, if nothing else, that you would highlight that may take this bill beyond just another extension?
Yeah, and I think, it's important to note, first of all, we've actually seen it get to the point where we're filing amendments for the floor. So amendments were due on Wednesday. So we actually have the universe of amendments that the Rules Committee will consider on Monday. Again, a meeting that's actually scheduled to take place to move us to the next step. Rules Committee is where they decide what amendments are actually going to get votes and what amendments aren't going to get votes. So we're seeing action that we haven't seen taken before.
one thing that takes some of the pressure away is that crop insurance is permanent. Nutrition programs are permanent. Some other things may be. What if nothing was permanent? I'm not sure it's feasible, but if nothing was permanent, seems like it would speed things, change things a bit.
You just gave me a little bit of a heart attack. That is very scary to me. In part because I still do a lot of work on crop insurance. And one of the things that we always talk about is that we are permanent. And so no matter what, a farmer doesn't have to worry about that in September. I totally get that. As they're harvesting their crop. I mean, I'd like to think that if it weren't permanent, it would light a fire. There would be a different level of pressure for sure.
How does crop insurance fit with the commodity programs and with both the standing and ad hoc disaster assistance programs that we have? Does that permanent safety net really help alleviate the necessity of pushing substantial changes in the commodity program? At the same time, you already mentioned that the scope of ad hoc assistance is sort of, to force a bad pun, it has trumped everything else in the safety net in terms of size. How do we figure out what the sort of formal safety net really looks like when some of it's dependent on a farm bill, some of it's permanent, and some of it's ad hoc?
Yeah, this is a bit of a Gordian knot, I think, at the end of the day. The difference between Title I and crop insurance was always relatively clear, right? Crop insurance can't handle multi-year price decline just by the nature of insurance. And so that's why you had these Title I programs. They could handle those multi-year declines, and you still had crop insurance there as sort of your rapid response to weather disasters, single year price declines, and whatnot. And so that was always pretty clear. But then ad hoc assistance has come into play. And I think that sometimes with ad hoc disaster assistance, it's a very imperfect tool for a variety of reasons. But I think one of the reasons it's imperfect is because the faster you get money out, the less targeted that money is. So USDA always wants to get disaster money out right away. And in order to do that, you have to create a very simple equation and a very simple system that may or may not get money to the right people. It may get money to people that are already perfectly well covered under crop insurance and Title I, and they've already been, if not made whole, they're doing okay. And it might miss people who really actually do need a check. But in order to refine those programs, it takes more time. And so I just kind of worry with ad hoc assistance. Like I don't ever want to see us fall into a habit where ad hoc assistance is just considered a regular part of our farm policy. Because again, I think if that's where we are, we need to be looking at different permanent solutions to that are more regular, more predictable. And I also, sidebar, and I've started to hear some economists pick up on this, which makes me happy. But I also worry that just pumping a lot of money very quickly into the ag economy feeds inflation in the system at a time when, quite frankly, we've got our own problems with inflation without that.
We look back historically, we've had this 2% increase in annual productivities for the past 50 years, fueled for the most part by public investment in research and extension work and also the private sector. Here recently, we've seen, of course, China and even the European Union spends more on innovation in agriculture than the U.S. does. And so, what are the prospects for innovation in the Farm Bill as we look forward? Are we going to continue to rely more on private sector corporations and multinationals to fund our research initiative here in this country versus other countries? Or what kind of play is that getting in the farm?
Yeah, this has been an ongoing frustration, I think, in ag circles is research funding. We've got someone here on our team who is far and away better versed in research spending and the research environment. But I think it has been a frustration, and everybody says research is a priority. The problem is here in DC, where it seems to break down is you got a lot of priorities, and where is it on the priority list? And it tends to, when we have an ag economy that looks like what the ag economy looks like today, it ends up lower on the list, and therefore We've just not seen it get the attention and the oomph that I think it deserves. We just saw a president's budget come out that wasn't particularly helpful for research. We're seeing appropriators working on ways to cut back, and sometimes research can get caught in those crosshairs as well. So I wish I could be optimistic and tell you I see some, really amazing outlook in this farm bill for research spending. I think we've made strides in a couple of areas, facilities being one of them, but there's so much work left to do, Mark. So much work left to do on that front.
There was substantial cuts to nutrition programs in OB3 and the One Big Beautiful Bill Act in July. And the way that I've been talking about that is like, this could affect the Farm Bill Coalition moving forward, that it could become a less bipartisan process, but I feel like it's to be determined. Have you seen anything, or do you have any thoughts on how that might play out?
Yeah, certainly this bill is going to be less bipartisan than previous farm bills because of those nutrition cuts. And I think that this is also the issue with doing farm policy in reconciliation. We always used to say, and as a Pat Roberts staffer, the mantra was, you never open a farm bill. Once you write it, that's it. You do not open a farm bill for reconciliation or for anything else, because once you do, no holds barred. It can be anything could come down the pike. And so it was always a bright red line that we never crossed. And, it got crossed in the Inflation Reduction Act. And, maybe for really good purposes, to add conservation dollars. Folks support conservation programs. I get it. But you cross that line, and it was a partisan process. And then what happens next? Flipping parties, another opportunity to have at it at reconciliation. Everybody's feeling chapped that it was partisan before, so we're going to make it super partisan again. And next thing you know, you've sort of got this snowball, and you've got a lot of hard feelings, and you've got a lot of hardened policy positions that just, I don't think, lead us to the best policy at the end of the day. So that's the part I wish we could kind of go back on.
Well, Tara, at the end of the day, what do you hope to see emerge from this Farm Bill round? What would be the most important thing that you would like to see result from what happens starting hopefully next week?
Yeah, obviously the goal here is to get it actually across a finish line. And I think there are a lot of good pieces in every title of the Farm Bill that we're working on right now. But to be really honest with you, I hope we get it done so that we can all take a bit of a deep breath, and maybe everybody has an opportunity to kind of go to their corners, and some of the political hard feelings that have come out of this Farm Bill through the reconciliation processes, both of them, we can maybe get in the rearview mirror and really start looking ahead to the next Farm Bill and how we can get back to a bipartisan process. Perhaps very naive of me after 30 years in this town, but a girl's got to try.
Once again, that was Tara Smith, Jenny Ifft, Mark Edelman, Brad Lubben, and Eric Atkinson. In today's show notes on agtoday.net, I will put links if you'd like to listen to this full podcast episode. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you up ahead. You're tuned in to Agriculture Today, and we conclude our Friday show with a weather update from K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, last week you mentioned that we were in the heart of severe weather season, and is that something we saw as we looked at this past week for weather?
Yeah, we had numerous bouts of severe weather, both in south central and eastern Kansas. Some places saw hail. We saw some hail to 2 to 3 inches in diameter. And then we also saw some tornadoes as well in southeast and far east. And then numerous wind reports that went along with some of those windier conditions once storms kind of conglomerated into more lines and complexes that we saw more wind events. Not quite as many of those, but we're still running above average in all 3 categories of tornado, wind, and hail for the state. Just tornado as an example, we only averaged to this point here at the end of April, early part of May. We should be about 12 to 15 tornadoes so far this year. Right now, Kansas sitting at about 31, and that's also including some very, very weak tornadoes that got maybe reported. But hail and wind are both above normal as well. And that's the influx of severe weather that we are expecting with the transition from La Nina to El Nino, mainly focused in the month of April. We look at the Eastern Pacific and the Equatorial Pacific, and temperatures have warmed greatly. In fact, we actually just pushed the real-time observations to El Nino status, but we don't classify it as an El Nino until it's El Nino for 3 months. So we've started that, and we had that transition occur in April, which meant increase in severe weather. We also saw an increase in rain, and rain was probably one of the bigger headlines. We needed some rain in portions of the central part of the state. We got some. We got some rain in western Kansas here this week. Not a ton, about a quarter, 0.3 of an inch in the higher totals, but pretty much everyone saw at least some precipitation of some sort, which is good. There was a lot of places that had not seen much precipitation, if any, in southwest Kansas before this recent event. However, there were some areas that saw a lot of rain. And just looking at the 7-day total of precipitation, 2 weeks ago, we were in northeast Kansas in that Marshall, Washington County, and we were just about a county and a half further south with a corridor of 4 to even 5 inches of rain from northern Dickinson County through Geary County and Muncie County, then eastward to Kansas City. That corridor had a lot of rain, multiple thunderstorms. In fact, in the Manhattan area, we had 8 hours straight of thunderstorms, which is not normal. we usually see a break of an hour or two between those storms, and that was throughout the overnight of just storm after storm after storm. And that unfortunately led to flash flooding and heavy runoff, and we ended up with some roads being closed and streams and rivers going over their banks and sending a big surge of water down the Kansas River as well. So those localized areas of heavy rain are not atypical for this time of year, but we're definitely seeing an upward trend in heavier rain events with these systems.
As we look at the forecast, can we be expecting to see any more rain?
Yeah, so the forecast is interesting. It's cooler than normal for another day or two here into Saturday. Then we see brief high pressure build in, and we're going to see a wind shift out of the southwest. That should bring warmer, drier conditions for the state on Sunday and Monday, with temperatures going above normal, with highs near 80. That's going to play into maybe the next system. There's a lot of uncertainty starting next week of kind of where this next system does eject out. The weather pattern has kind of shifted, and now it's definitely more of like the pattern we were in March and February, with low pressure over the eastern U.S. that brings frequent cold fronts. So it'll give us occasional chances of showers and storms, but I don't think we'll see nearly anything as widespread as we've seen over the last week. And temperatures are still going to be cooler than normal. We'll start trending warmer than normal as you go later into next week again, as you kind of keep a roller coaster of temperatures going. And then I think, again, mostly folks will stay dry throughout the period.
Chip, I appreciate you taking the time to join us today.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond. You can always find more weather information from K-State by going to the Mesonet website, mesonet.ksu.edu. That's all we have for you today on Agriculture Today, but we'll be back with more for you on Monday.